Hi, this is Juliette Collin with Beckley and Associates, and today I'd like to talk about the profit and loss statement for businesses. First, a little bit about our firm. We're a CPA firm in Plano, Texas, and we serve clients in cities around the DFW Metroplex, Dallas-Fort Worth Metroplex, and around the country. Why do we do what we do? We are awed by and grateful for the trust our employees and our clients place in us every day. This great responsibility is taken very seriously, it's paramount, and it informs every decision we make. So, getting right to it, the primary purpose. Here's a sample profit and loss statement. The primary purpose of a P&L, also known as an income statement or profit and loss statement, is to show whether a company has made a profit or has incurred a loss during a specific period. Usually monthly or quarterly. You can show you can do an annual P&L separated by month or quarter, but the most common is a monthly P&L. Another purpose of the P&L is to show the company's ability to generate revenue or sales, to control costs, and to manage expenses. Parties such as shareholders, creditors, your management team, investors, all use the P&L statement to assess the company's financial health and to make important informed decisions. The key elements are revenue or sales, cost of goods sold or cost of sales, gross profit, operating expenses, your day-to-day expenses for the business, for operating the business, operating income, and other income and expenses, and net profit or loss. Let's pull out, first of all, revenue. Revenue or sales is the number of sales, the dollar amount of sales minus any returns or discounts and allowances. So if somebody returns that widget you sold, that $100 comes off of your sales number, and if you discounted someone's widget by $50, that also comes off the sales number to arrive at the net sales number. Cost of goods sold. These are the particularly materials and labor required to produce a good for sale. Expenses. Now, these are your operating expenses such as your salary and wages, your marketing, advertising, repairs and maintenance, office supplies, depreciation, interest, and other expenses. Net profit. Net profit is also known as the bottom line. It is total revenue minus total expenses, minus taxes, minus other non-operating costs. Again, that's the bottom line. Is your company really making a profit, or is it incurring a loss? In summary, the profit and loss statement is one of three primary financial statements, the other two being the balance sheet and the statement of cash flows, and the P&L is one of those three that helps you manage your business and track your results, report those results to stakeholders, being investors or management team, and it helps you secure financing for your company, and one that is often not thought about, it helps to optimize the sales price of your business when it comes time to sell your business. So I hope you've enjoyed that brief analysis of the P&L statement, and we'd love to hear from you at beckleycpa.com or on Twitter with the handle @TheTaxMan with 2 X's. Again, I'm Juliette Collin with Beckley and Associates. Thank you very much.